hierarchy is. So the hierarchy of order blocks, this video is going to be a very short video actually, because it's not a lot, right? It's not like a strategy. I'm just trying to like show you. So the hierarchy of order block is that there are, sorry, not order block, the hierarchy of points of value. There are some points of value that are more valued over the other ones, right? So there are some points of values that are like basically when price gets there, price wants to react from them there instead of the other way around. You get, so like that's just what it means. So I think in the first, I think I'll just type it. So the first one up right on top, because you actually learned the first one right on top sits the expansion type entries. Expansion type entries, right? Then after it we have the fair value gap. After it we have order blocks. Okay, after this expansion type entries, we have any form of liquidity type entry. That's like this void and all those things. When you just have like a liquidity void around your this draw, something like a draw, when you have like a liquidity very close to your entry, most times price will want to like take off any place that is liquidity, because that's what price seeks. Price will want to take off any place that is liquidity first before anything happens, right? So after the order block, I think then you have other distance. So I'll just stop here because it's like the only type of points of area of values that we've actually learned, or points of interest that we actually learned. So I'll cut it short here. So expansion type entries, we have breakout block and mitigation block. So don't forget. So liquidity, any place that's liquidity, price will most likely want to react from there and drop, because like price is seeking liquidity. Then we have fair value gaps, then we have order blocks. So you can see order blocks is like the last in this list. This means order blocks, price will react to another block when price wants to. Or if there is an expansion type entry, like a breakout or a mitigation block around that place, price will most likely prefer towards trade from there. All right, so right up, we can actually see this example here where we actually have this is a break of structure. So this break of structure basically, this place has been mitigated. Oh, sorry, not that mitigation. So, but this break of structure validates this particular area as another block, right? And then what happens? Price just comes and does what? Boom, takes it out, expands and take it out, right? And then price came here and dropped. So now this, what happened here is price actually created a form of liquidity, right? So see what happened. Shift this recording button somewhere. All right, so this place now, price has created a form of liquidity. Some persons will think it to be the entry, still fine, but price has created a form of liquidity here, right? Right, and look at the actual entry here, which sits very, very, very close to it. So basically, you can actually take this type of trades and it will play out very, very, very fine. So you can see, and if you actually target here as your target, you target there as your targets, you would have roughly a 3-hour trade and you'll be in for a lot of money with that type of risk reward. All right, before RR. All right, so you can see how very sweet and very clean this one is. So you can see that the other block right on top of here was basically missed. The other block right on top of here was what's basically missed. And this price did not react from there. So that's just one the thing about hierarchy, where there is fair value gap or another breakout block. Price most likely wants to react from there instead of the other block. I'm seeing another scenario here. Okay, the same scenario too. This one went up a bit. Same scenario to break a structure. This particular order block has been mitigated, which now validates this particular one now as the new order block, right? Now you can, sorry, as the new expansion type entry, guys. So sorry, as a new expansion type entry. So this is a fair value gap. This, I'm on a lower time frame. This is on 45 minutes. If we go to the higher time frame, this is the fair value gap. How do I know? Look at this. Look at this. Look at this structure. Look at this formation. This is a fair value gap. But I know some people be like, but it's not a fair value gap. It is, if you look very well. This is a fair value gap. I can try and go up the higher time frame and check. Can I see this fair value gap? So now this fair value gap, yeah, it aligns with both this mitigation block. There's mitigation block, there's fair value gap, and then there's a form of liquidity here, right? There's a form of liquidity here. So you can call this one inducement. Right? And see what price did. Price came up. Remember what I told you guys about fair value gaps? If price wants to react to any gap, price will extend up to 50% of the gap. So price will come up to 50% of the gap before dropping. So what happens? That's the consequence encroachment. So place at the 50%. Your target can actually be any of this external range, this one as your TP1. If you want to hold till further notice, this is your TP2, and this is finally your TP3, the last visible external range there, right? And boom, SLs right above the FVG. And this is a very, very clean 10 RR delivery, right? A very, very clean 10 hour delivery. So this one is actually very nice. Next time you see something that looks like that, just note all these points of area of value is actually aligned up. And you can see that the order block was basically missed. The other block here was basically missed. Which is this one was basically missed. Why? Because there's a fair value gap, there's liquidity, and there's presence of like a mitigation block there. So what is price looking for the other block for? Although in some certain locations the price would actually go to the other block. We all know that the market has a mind of its own. Do you get? So yep. Okay, so it's not really something, it's not really much, it's not really a lot. So that is like I'm sitting for my example. That's like suppose it shows hierarchy of points of interest. You just know what points of interest the price is most likely going to respect and which one it's it will miss out on. Do you get? So trying to look for one very clear example. Very, very clear example. Okay, I think this is another one. Let me mark out this one. What's happening here? But this is another one, Sha. This is another one. This is another one. I've forgotten what happened there. I don't even know why I marked it out, but I don't want to go up the high time frame. But let's just see for our time frame. Okay, exactly. I just remember that I know I was teaching something and this happened. So you guys can clearly see it now. Can clearly see it. After this expansion, it created room for this mitigation block, right? And then price was steered up to the 50% mark. And because of the expansion, price will not want to go up to react to the other block. And price actually is attracted more to breaker block and mitigation blocks than other blocks. And this is like 9.8 hour. If you leverage this on your MT4 and your MT5, you'll be in for a lot of money. Trust me. So the same thing happened here. This expansion gave room for the mitigation block around here, right? And then price also steered up to 50% of it, targeting the external range. We should have. So this one, I took this trade and I shared it with them. 13 hour setup, very, very clean. But if you want to actually play it safe, you can put your stop losses above the other block. You'd have like a 5.74 hour, which is not bad to get. So that is it's just take it in mind that price would most likely want to react to a breaker or a mitigation block more than it would want to react to another block, right? And price will most likely want to seek liquidity where it finds liquidity. If there is no area of value around it, or if the other block is too far away from it, price will just take liquidity and do what about turn to get. So okay, see what happens now. The other block is probably seated wherever it wants to sit, somewhere above here, right? Somewhere above there. So the expansion happened, and where the price now reacts, price now reacted to this what mitigation block that is here. So you can see that price just swept liquidity. Price just swept this liquidity and just dropped. Like if there was no mitigation blocks, DSF price would just drop. Price just sweep that place and just drop. Like you can see how very immediate it is. That's why like if you're not sharp, you're waiting for price to come up back again. You'll be able to miss your entry. You just need to be able to like read what is happening on charts to get. So yeah, it's like in this type of situation now, this rapid type of situation, somebody waiting for price to get there. Before it gets there, you know what you must have waited for now. So that's just it. Be reactive, not predictive, right? See this one too. Price just took out the liquidity and then reversed. No time to check time. Price took out the liquidity and did what? Reversed. No what? Time to check time. Okay. So that'll be all for hierarchy. In the next video, we'll be looking at other things. I'll see you guys in the next one.